If the word investing makes you feel overwhelmed, confused, or like you're already behind, you're not alone. For many people, investing feels like something everyone else understands, but they somehow miss the lesson where it was explained clearly. Instead, investing is often shown with complicated charts, fast-moving numbers, and dramatic headlines that make it feel risky or intimidating. That confusion leads to hesitation. People wait until they know more. They wait until they have more money. They wait until the timing feels perfect. And while they're waiting, years quietly pass. In this video, I'm going to walk you through how to start investing this year using simple, plain language so you can begin with confidence, even if you're starting small. This isn't about getting rich fast. It's about building stability, security, and options over time. It's about playing the long game. Saving money is important. Having an emergency fund and cash for short-term needs is essential. But saving alone usually isn't enough to build wealth over the long term. Inflation slowly reduces the buying power of money that just sits in a bank account. Even when prices rise gradually, cash loses value year after year. That means doing nothing with your money is still a decision, and over time, that decision can cost you. Investing allows your money to work in the background while you live your life. And here's something most beginners don't realize. You don't need a lot of money to start investing. What matters most isn't how much you invest. It's how early you start and how consistently you continue. Small, steady contributions can grow into something meaningful when given enough time. At its core, investing is actually very simple. You're putting money into assets, usually businesses, with the expectation that they grow over time. When you buy a stock, you own a tiny piece of a company. If that company grows, becomes more profitable, and creates value, your investment can grow too. But many people hear this and assume investing means stress. They imagine watching the market every day, reacting to every headline, constantly worrying about crashes or losses. That's not long-term investing. Long-term investing is quiet. It's repetitive. And it often feels boring. Instead of trying to pick individual winning stocks, most beginners are better off starting with index funds. Index funds bundle many companies together into a single investment. This spreads your risk across the entire market instead of tying it to one company. You're not guessing which business will succeed. You're participating in long-term economic growth. Let's pause for a moment and talk about what investing is not, because this is where many beginners get stuck. Investing is not day trading. It's not chasing trends. It's not trying to outsmart the market. And it's not about reacting emotionally to short-term news. Those approaches get a lot of attention, but they're not how most people successfully build wealth. Long-term investing is about patience, systems, and time. Now let's briefly compare individual stocks and index funds so you understand why this matters. Individual stocks can rise quickly, but they can also fall quickly. Their prices can swing based on earnings, news, or even social media hype. Investing this way requires research, experience, and emotional discipline. Index funds are designed for steadier growth. They hold many companies at once, which reduces risk over time. They don't require constant monitoring and are well suited for people who want sustainable progress. For most people starting out this year, index funds are the most realistic and sustainable option. You don't need to check your investments every day. You don't need to react to every headline. You don't need perfect timing. You just need consistency. A common fear beginners have is, what if I invest and the market drops? This is a normal concern. Markets do go down. That's part of investing. But long-term investors don't lose money during downturns unless they panic and sell. In fact, investing consistently during down markets often helps you in the long run because you're buying at lower prices. The goal isn't to avoid downturns. The goal is to stay invested through them. To start investing, you'll need a brokerage account. A brokerage account is simply an account that allows you to buy and hold investments like stocks and funds. Opening one today is straightforward. Most platforms allow you to sign up online, link your bank account, and begin investing in less than 15 minutes. You'll choose between a standard brokerage account or a retirement account. If you're investing for retirement, tax-advantaged accounts like IRAs are often a smart starting point because they help your money grow more efficiently over time. But don't get stuck trying to make the perfect choice. Starting matters more than optimizing. You can learn as you go. You can adjust later. You can refine your strategy over time. Another myth about investing is that you need a large lump sum. You don't. Many people start with $50 or $100 per month. What truly matters is building the habit. Automatic monthly investing removes emotion and second guessing. It turns investing into a background system instead of a stressful decision. Now let's talk about what investing looks like over time, because this helps set realistic expectations. In the first year, investing often feels slow. Your balance might move up and down, and growth may not feel dramatic. After a few years, consistency starts to show. Contributions add up. Market growth begins to compound. Over the long term, time becomes your biggest advantage. This is why patience matters more than perfection. One of the most powerful forces in investing is compound interest. Compound interest is when your money earns returns, and those returns begin earning returns of their own. At first, progress feels slow. Sometimes it feels like nothing is happening. But over time, momentum builds, and growth accelerates. The earlier you start, the more time your money has to compound. That's why starting this year, even with small amounts, can meaningfully change your financial future. You don't need to be perfect to start investing. You don't need to know everything. You don't need perfect timing. You don't need a lot of money. You just need to begin. Investing isn't about timing the market. It's about time in the market. If this video helped make investing feel clearer and less intimidating, give it a like. And if you want more calm, practical guidance on building wealth the long way, subscribe to Long Game Finance. Because the goal isn't fast money. It's sustainable freedom.